Hey everyone, welcome back to Corporate Decoded, the place where we break down the financial secrets of the corporate world. And yeah, sometimes those secrets are buried so deep you need a drill to get to them, but hey, we love a challenge. Today we are digging into the semi. Annual report for T. Rowe Price Retirement Funds, Inc. Specifically the Retirement Blend 2030 Fund for the period ending the 30th of November 2025. Get ready because we are about to decode some serious numbers. So this is essentially a shareholder report for the T. Rowe Price Retirement Blend 2030 Fund. It tells us how the fund performed over the last 6 months. You know, they want to make sure investors know what is going on with their money. First up, let's talk about the nitty-gritty, the costs. For a hypothetical $10,000 investment in the investor class of the Retirement Blend 2030 Fund, the cost for these 6 months amounted to $20. That is 0.38%. Not too shabby really. Now for the I class, the costs were even lower at just $12 or 0.22%. This just goes to show how important choosing the right share class can be for your investment costs. Now for the big picture numbers, the total net assets for this fund stood at a massive $1,225,136,000. That is a huge sum of money being managed. Out of this, 100% net assets makes up the total investments in securities. And how actively are they trading within the fund? The portfolio turnover rate was 7.1%. This means that over the period, about 7.1% of the fund's holdings were bought or sold. A lower turnover rate generally suggests a more buy and hold strategy, which can sometimes mean lower trading costs and potentially less short. Term capital gains, tax implications for investors. Let's dive into what the fund actually invested in. The asset allocation shows us where the money is going. Domestic equity funds make up the largest chunk at 46.4%. This means a significant portion is invested in US stocks. Following that, we have domestic bond funds at 22.5%. Then international equity funds grab 18.3%. So they are not just betting on the US, they are also looking for opportunities abroad. International bond funds represent 9.4%, and then there is 3.4% in short-term and other investments. This diversification across asset classes and geographies is a key strategy for a balanced fund like this. Now for the top 10 holdings, this gives us a clearer picture of the specific investments driving the fund's performance. The biggest single holding is the T. Rowe Price Equity Index 500 fund at 18.6%. This is basically an investment designed to track the performance of the S&P 500 index, a basket of the 500 largest US companies. Next up is the T. Rowe Price QM US Bond Index Fund at 11.6%. This likely tracks a broad US bond market index. Then we see the T. Rowe Price International Equity Index Fund at 9.0%. This suggests they are using index funds to get broad exposure to different markets and asset classes. The other top holdings include the T. Rowe Price Value Fund Growth Stock Fund, US Limited Duration TIPS Index Fund International Bond Fund, USD Hedged Real Assets Fund International Value Equity Fund, and Hedged Equity Fund showing a mix of active and passive strategies alongside different geographical focuses. Scrolling down, we get into the actual financial statements. One of the first tables gives us the financial highlights for both the investor class and the I class. Looking at the investor class, the net asset value, or NAV, per S-Hare started the 6-month period at $10.60. It then saw an increase from investment activities, adding $1.10, bringing the end of period NAV to $11.70. This is a healthy increase for the period. For the investor class, the total return for the 6 months ending the 30th of November 2025 was 10.38%. That is a solid return for half a year. For the I class, it was even slightly better at 10.46%. Now let's look at the expense ratios in more detail. For the investor class, the gross expenses before reimbursements was 0.38%. The adjusted net expenses after reimbursements from price associates were also 0.38%. This indicates that TAT, Rowe Price, is covering some expenses out of pocket to keep the reported expense ratio stable. The net investment income for the investor class worked out to 1.76% of average net assets. This means the income generated from the fund's investments after expenses. Now, let's get into the portfolio of investments. This is where we see the actual holdings. The fund is heavily invested in bond funds and equity funds, as we saw in the asset allocation. Under bond funds, the largest holding by value is the T. Rowe Price QM US Bond Index Fund, valued at $142,583,000. Other significant bond fund holdings include the US Limited Duration TIPS Index Fund and the International Bond Fund US DEG. The total cost of all bond funds was $387,209,000. In the equity fund section, the T. Rowe Price Equity Index 500 Fund is the largest holding, valued at $227,998,000. This confirms its significant role in the fund's strategy. Other major equity holdings include the International Equity Index Fund, Value Fund, and Growth Stock Fund. The total cost for all equity funds was a substantial $657,537,000. Finally, under short-term investments, we have the T. Rowe Price US Treasury Money Fund valued at $41,465,000. This portion provides liquidity and stability. The total cost for all investments across these categories was $1,086,211,000, with a total value of $1,225,376,000 at the end of the period. This difference is due to market appreciation. This section details the fund's investments in other T. Rowe Price funds, which are considered affiliated companies. It breaks down the net realized gain or loss investment income, and the change in net unrealized gain or loss for each affiliated fund. For instance, the T. Rowe Price Equity Index 500 fund contributed a net realized gain of $38,000 and saw a significant change in net unrealized gain of $26,219,000. These figures illustrate how the underlying funds are performing and how that performance flows into the Retirement Blend 2030 fund. Across all affiliated companies, the net realized gain was a loss of $252,000, but there was a substantial net unrealized gain of $87,632,000. Moving on to the statement of assets and liabilities, we see the fund's financial position on the 30th of November 2025. The total assets were just over $1.241 billion, with the vast majority being investments in securities. The net assets of the fund are $1,225,136,000. This is the value that belongs to the shareholders. The breakdown shows a total distributable earnings figure and paid in capital. And here we have the net asset value per S-share for both classes. The investor class is valued at $11.70, while the I class at $11.72. This slight difference reflects the different expense structures of each class. The statement of operations summarizes the fund's financial performance over the 6-month period. Investment income distributions from underlying price funds totaled $10,796,000. After deducting investment management and administrative expenses, which were $1,298,000, the net investment income was $9,498,000. On the realized and unrealized front, there was a net realized loss of $252,000 on the sale of underlying price funds, but a significant change in net unrealized gain of $87,632,000. This unrealized gain essentially means the value of the fund's holdings increased on paper. Combining these figures, the total increase in net assets from operations for the 6 months was $96,878,000. That is a very healthy increase. The statement of changes in net assets provides a more detailed look at how the net assets changed over the period. We see the increase from operations again at $96,878,000. Distributions to shareholders were zero for this period, which is common for accumulation-focused funds. The biggest driver of the increase in net assets came from capital share transactions. Shares sold for the investor class brought in $112,691,000, and for the I class $332,914,000. There were also shares redeemed, but the sales significantly outweighed the redemptions. This resulted in a substantial increase in net assets during the period of $407,382,000, bringing the total net assets to just over $1.225 billion. Now let's look at the notes to the financial statements. These provide important context and details about the fund's operations. Here we learn that the fund is a diversified open-end management investment company that invests in a portfolio of other T. Rowe Price stock and bond funds. The fund's asset mix will become more conservative over time as it approaches its target year 2030. This section explains how the fund's investments are valued. It follows generally accepted accounting principles, or GAAP, and uses a fair value hierarchy to categorize inputs and determine fair value. Importantly, all of the fund's financial instruments were classified as Level 1 on the 30th of November 2025. Level 1 means they are valued using quoted prices in active markets for identical instruments, which is generally the most reliable valuation method. This note tells us about the purchases and sales of those underlying price funds. For the 6 months ending the 30th of November 2025, purchases of these underlying funds were around $391.9 million, and sales were around $71.9 million. This indicates significant activity in rebalancing the fund's portfolio. Generally, no federal income tax provisions are needed because the fund intends to qualify as a regulated investment company and distribute all its taxable income and gains to shareholders. This is a standard structure for mutual funds. This is an important section. The fund is managed by T. Rowe Price Associates Inc. This company also provides services to the underlying funds. The fees are quite interesting. For the investor class, the effective annual fee rate was 0.38%, and for the I class, it was 0.22%. These fees cover investment management and operating expenses, excluding certain items like interest and taxes. The difference in fees between the classes is mainly due to differences in expected shareholder servicing expenses. It is good to see that the fund operates with transparency regarding its related party transactions. This section explains that the fund is considered one reportable segment. This means the chief operating decision maker, the management committee of Price Associates, looks at the fund's performance as a whole when allocating resources and assessing results. Finally, we have other matters which often covers risks and uncertainties. This note discusses how unpredictable environmental, political, social, and economic events can significantly affect the economy and markets. It acknowledges that the extent and duration of such events cannot be predicted and could negatively impact the fund's performance. This is a standard disclaimer, but it is always worth noting the inherent risks in any investment. So what is the story here? Well, the Retirement Blend 2030 fund is running like a well-oiled machine. The numbers show solid growth in net assets and a healthy total return for the 6-month period. They are using a diversified strategy heavily relying on index funds for broad market exposure, but also incorporating actively managed funds like value and growth stock funds. The expense ratios are quite competitive, especially for the I class. The fund's direction seems clear. They are aiming for total return with a balance of capital growth and income, and their asset allocation will naturally shift towards more conservative investments as we get closer to 2030. The main risk, as always, lies in market volatility and unpredictable global events, but the fund appears well managed to navigate these challenges. Looking at the numbers, the $1.2 billion in assets under management and the strong positive total return are definitely positives. The use of index funds suggests a cost-conscious approach that should benefit investors over the long term. In conclusion, the T. Rowe Price Retirement Blend 2030 fund seems to be on track to meet its objectives. The financial report paints a picture of a stable and growing fund supported by a clear investment strategy and competitive cost structure. Alright, that is our deep dive into the Retirement Blend 2030 Fund's semi-annual report. What are your thoughts on these investments and T. Rowe Price's strategy? Let me know in the comments below. If you found this breakdown valuable, please hit that like button and subscribe for more corporate decoder insights. Don't forget to join our Discord community linked in the description for more in-depth discussions. Thanks for watching, and we'll see you next time.